Welcome to online lectures by CA Studies. For more lectures online, please do visit castudies.lk.
Hello everyone, welcome back. Today we are going to learn accruals and prepayments. Accruals will be liability for us, prepayments will be asset for us. There are no specific standard for expenses and income. I have already explained you, that is there are only 5 financial statement elements. First one is asset, second one is liability, third one is equity, fourth one is expense, final one is expense. For the assets, some specific assets we have a different standard. For liability also, some specific liability we have the different standard. For the equity, for the expense or for the income, there are no specific standard. Most of the time, right, we are applying the conceptual framework. Then you will never doubt what this lecture explain, right? Because I am saying there is no exact standard for the income also. Now you think SLFRS 15 is contract for the revenue from the customer. It's a revenue standard. But I told there are no specific standard for income. Yeah, there are no specific standard for income. It's true, because income have two division. First one is revenue income, second one is capital income. For the revenue income, we have the standard that is called SLFRS 15. For the income, there are no specific standard, right? Other than the revenue income, there are other income also, right? Revenue also income, other income also income, right? Revenue is taken as a sales, other income taken as a other income, right? Therefore, for the expense and income, we mostly take the conceptual framework for the accounting treatment. Now look at let's look at how that accruals and the prepayments are regulated by the conceptual framework. According to conceptual framework, there are two concepts. First one is accrual concept. First one is accrual concept. Second one is matching concept. According to these concepts only, we will recognize the expense. Expense means future economic benefit flow out from the entity. So that is decrease in the future economic benefit. So it's a expense. So when future economic benefit decreases, we reduce. But that decrease will be subject to accrual concept and the matching concept. You can see in conceptual framework, this is not explained in the study pack. Therefore, this knowledge we have to get from out. Paragraph OB 17. Go to the paragraph OB 17 in conceptual frameworks part 1 and matching concept. Go to the paragraph 4.50 in conceptual framework part 4. There are 4 parts of conceptual framework. From that only we are studying. So here there are for the accounting entries, for the preparation of the financial statements, there are concepts, accounting concept. From the accounting concept, accounting concepts there, accounting concept. From the accounting concept, right, conceptual framework has been established. From the conceptual framework, Sri Lanka accounting standard and LKS, Sri Lanka accounting standard and Sri Lanka financial reporting standard, SLFRS comes, right? From the LKS SLFRS, accounting treatments done. accounting treatment. So base for this conceptual framework and standards is concepts. We have to first understand the concept. First very important concept in the accounting is unitary concept. Always we have to think owner and the business are different persons. Therefore, if owner put the money, business is owing that money to the owner. So owner always taken as the liability of the business. Okay, let's look at how this conceptual framework explain accrual concept and the matching concept. I have brought the standard book for this explanation here. You don't need to refer this, you just take a note. There are in first part of the conceptual frameworks, there are only 3 pages, sorry, there are about 4 pages, there are 21 paragraphs. In that 21 paragraph, 17 paragraph talk about the accrual concept. It's I'll read for you. Accrual accounting depicts the effects of transactions and other events and circumstances on a reporting entity's economic resources and claims in the period in which those effects occur, even if the resulting cash receipts and payment occur in a different period. This is important because information about a reporting entity's economic resources and claims and changes in its economic resources and claims during a period provides a better basis for assessing the entity's past and future performance than information solely about cash receipts and the payment during that period. First paragraph says we will never consider about the cash receipts or cash payment. Here this explains not consider cash receipts or payments. Right? It says, right, I read again that accrual accounting depicts the effects of transactions and other events and circumstances on a reporting entity's economic resources and claims in the period in which those effects occur, even if the resulting cash receipt and payment occur in a period. You can see here, right? Here I am saying not consider, never consider when we paying that expense or when we paying that claims. Right? Here, for example, take electricity bill for the month of May 2022. So this electricity bill is explaining it is a bill for consumption of the electricity on the May month. That's why it says effects of. That's why it says, this is not difficult to read. Yeah, that's why it says depicts the effect of transaction and other events and circumstances on a reporting entity's economic resources and claims in the period in which those effects occur. So economic resource is electricity. If we are using the electricity as an economic resource, other side our cash will be flow out. So this is called accrual concept. So month of May we use this amount of electricity, for that we got the money. So at end of the month of May we have to pay that electricity, even though we can pay after 1 month or after 2 months, but that electricity expense is attributed to the month of May. Right? On the 31st May 2022, this electricity bill will be charged to the profit or loss. If monthly accounts prepared, right, say month of May monthly accounts prepared by the company, normally we prepare the monthly accounts for companies. Here sales will be there, right, cost of sales there, then gross profit there. After gross profit, administrative expenses, selling expenses, other expenses, and finance expense there. Electricity bill will be there. So electricity bill will be 0. if we show the zero electricity bill, right, for the month of June, to make this much of sales, or to make this much of cost of sales, or to make this much of profit, we use the company's electricity, government electricity. So we have to pay for that. So we are not showing the electricity bill here. So it's wrong. It's not showing the actual profit or loss. So accrual concept saying don't worry about the cash payment or receipts. You can pay after a year. You can pay after 2 years some expenses. But it should be taken as the expense or income for the period on which the transactions and the events will impact in the economic resource of the company. That is the accrual basis. Here for the accrual concept, don't buy out the definition. Understand the meaning of the definition. If you write this explanation also, you will get a marks. If it is a essay question, but you are getting the MCQ question. MCQ question, most of the time that question will come with the calculations, right? That is called accrual concept. Let's talk about matching concept. Here matching concept is paragraph 4.5 in conceptual framework 4. Here 4.5. So 4 means fourth conceptual framework. Fourth conceptual framework, it means part 4. Part 4 of the conceptual framework, 50th paragraph. Right? In that 50th paragraph, right, it says expenses are, if you won't write, you will never look this standard book and you will never get the paragraph of this, and you will never look at that, right? You can download this financial Sri Lanka accounting standard from the Institute of Chartered Accountants of Sri Lanka's website, right? If you can download and read only this paragraph, what I am marking only important here. There are almost 65 paragraph in part 4 of conceptual framework, but I am highlighting only 50 because in your level it's also open book, it's a closed book, right? But in corporate level, lecturing is very easy for me because it's open book in corporate level subject, that is CL2, financial reporting and governance. That is an advanced subject for this subject, business level 1 financial accounting subject, and there I will not explaining like this. I am giving the paragraph and I am explaining and I am giving a summary in front of the standard book. Here standard book you have a blank page. In the blank page, here like this we can take a summary, we can take a short notes. If a question come in a paper, we can take a short note, we can see the summary where the paragraph there for the accounting treatment, then go to that paragraph and read the paragraph within a 10 seconds and find out the accounting treatment is the guidelines to face the corporate level subject easily. But for your level, unfortunately you will get a closed book exam, right? Therefore we have to remember everything. Remember means don't buy art, understand the meaning is enough. I am always saying here 4.5 paragraph is this, expenses are recognized in income statement on the basis of a direct association between the cost incurred and the earning of specific items of income. That's all. That is called conceptual framework. Conceptual framework is expenses should be recognized. Expenses should be recognized in the period in which the cost has direct association with the income earned. very good example for this matching concept is cost of sale. Cost of sale is the best example. Cost of sale is the best example for matching concept. I'll explain you. See, we have bought 100 quantities of trouser. 100 quantities of trouser. Trouser price is say 200 rupees. So we have bought 20,000 worth of trousers. Right? For each trouser, we will keep a 10% margin, say. So one trouser price is 210 rupees, 220 rupees. Right? This is bought on 1st May 2022. Sorry, 2022. Now you can see here, right? We bought 100 quantity, 100 trouser at rupees of 200. Now on the day of, say, on the day of 31st May 2022, we get a report, general ledger. In that general ledger it says we have sold 20 quantity of sales, 20 quantity of trouser. So what is our sale amount? 20 into 220. This will be the sale amount. How much? 222, 44, 4,400. Is it correct? Yeah, it's correct. 4,400 is the sale. Now when we prepare the financial statement, here sales we showing 4,400. Cost of sale how much? Cost of sale. So cash gone out 20,000. Cash came in 4,400. So here actually how much cash increase? Cash increase is plus 15,600, right? So cost of sale is not 20,000. Cost of sale means here cost of the trousers which is directly associated with the sales of that trousers. So sales of that trouser directly associate with how many quantity of trousers? 20 quantity of trouser. So 20 quantity of trousers cost only we have to deduct. So income is this, cost is we don't know, we have to find. So income of each trouser is 220, expense of each trouser is 200. Here we cannot deduct 20,000 here. We have to deduct a cost that is directly attributed to this sales, that is called cost of sale. Right? Here 20 trouser cost is how much? 20 into 200, 4,000. So 4,000 will be the cost of sale. Right? This is a direct calculation we are taking. So gross profit is 400. So this is a matching concept. Right? So only cost of sale is the best example for the matching concept. Other expenses also we can take. I'll explain. Now this is normally not practice in company, not directly take. It's difficult, right? Purchase is this much, right? Purchase 200. We purchase how much quantity? We purchased 20,000 worth of trousers. That is 200 quantity, right? So 100 quantity of trousers sold. Now balance is how much? 80. So that is taken as a closing balance of stock. So 80 quantity into 200, how much? 16,000. So 16,000 we haven't we haven't sold. That's why we are deducting from the purchase. Now this will be go to the next month stock. So next month if we sell, we can deduct from next month revenue. Yeah, this is called matching concept, right? Do we need to buy out the definition? No need, right? Also, matching concept is the base for the depreciation charge. Depreciation also best example. Here I will have to give one advice to all of you. Here don't think that is I will have to explain all the definitions and all the examples to you, right? It means we have practiced and we have guided by the advanced level teachers, that is if we buy out the definition what they giving, we can pass. If you write the difference answer in the exam paper that is prepared by your class teacher, they will put a wrong mark. They will say so for example, take business is as the different definition. If you miss a one word, they will cut half marks. It means they also do not know what should be taught. You also do not know what I have to learn. Thing is understanding. Thing is you have to show you have the knowledge, right? Economic definition එක buy out කරන්න එපා. අනිත් depreciation definition එක buy out කරන්න එපා. buy out කරලා ලියුවා අපි advanced level එකකින්. එහෙම ලියුවොත් තමයි advanced level pass වෙනවා නම් you have to find that, right? But here you will never pass if you buy out. You please understand and work for what is need for the chartered accountant, right? First you have to understand what is our chartered institute is expecting from us, right? For that also I have done separate video that is freely published in the YouTube, so you can see from there, right? So if you want, that is a biggest video, that is more than 1 hour video, so from that you can understand. It means most of the students is still not understood what I have to learn from the lecturer. What is my study strategy? You have to keep some strategy for your studies, right? Here I am saying don't buy out this. Never buy out. Understand? Okay, cost of sale we deducting closing balance because it was not sold. It is not actual cost for us. It's a deferred cost. Future we will cost. So today we are deferring that. Deferred means we saving, we accumulating. Depreciation also same thing. So this month of May, we have used say building worth of 100 million. This building after 20 years, this building will be collapsed. We have to break this building and we have to build new building. It means after 20 years time, that building cannot be used. That's why 20 years, say 20 years we are depreciating. 20 years lifetime there. So 20 years we can use this building. For 1 month, from this 100 million, from this 20 years, we have used the one month for our business. So building can be used for 20 years. So 1 month depreciation should be taken to the monthly accounts. So we have to divide this 100 million into 20 years. After got the answer, again we have to divide by the 12 months. So 1 month depreciation will come. That is also matching concept. Charging the cost to the profit or loss, that is directly associated with the income, right? So matching concept says that. So both concepts are very important in order to show the accruals and the prepayments, right? So after electricity charge only we are paying for electricity. So that doesn't mean after a month only we have to pay the electricity. For example, say some companies know their electricity bills amount. Each and every month they will get the 80,000 worth of electricity. So they will assume after month of May we will not having the cash that much. So in April last week we are paying the electricity, just estimating and paying. So 80,000 just estimating and debit to the asset account and credit to the electricity. So it means that's a prepayment. So we are paying in front for the month that is actually we have not used that, right? So that is called prepayment. That is also accrual expense. So that is prepayment expense, right? Now look at what else we need to understand in order to understand this accrual and prepayments. Then accrual, prepayments, practically applying this accrual concept and the matching concept is very difficult, my dear friends, right? In any companies, for the accrual concept and the matching concept, we have to keep the different Excel sheet, otherwise different book for that's identifying the expenses and the income that is not happening in cash or cash payment or cash receipt on the same month. So we have to charge an expense by look at the bills. After that only we have to pay. So there are systems, there are accounting package also there. We have to keep a different accounting package, same accounting package, different modules will be there in accounting package. In there we will have to list down these things. One by one we have to pass the double entry and keep the expenditure there, right? Theory side also understand, practical side also understand. Then your exam you will understand what is the examiner expecting from you, right? Now further to this, here expense recognition is very important here. So accrual concept and matching concepts always go with expense recognition. Here we have to recognize the expense based on the accrual concept and the matching concept. You can go to the paragraph 4.49. If you are not having that standard books, don't go. I will give the short note, that is enough. I am selecting the paragraph that is relevant to our syllabus only. 4.49. Here 4.550, the 4.49, 49th paragraph in the conceptual framework, part 4 says expenses should be recognized if that expense will decrease our economic benefit. It should reduce our economic benefit, right? Economic benefit should be decreases, then expenses can be charged. If economic benefit cannot be decreases, it cannot be charged, right? I will read this paragraph for you. Second one, 4.50 conceptual framework 4. This is talk about matching concept, right? Matching concept. Based on the matching concept, we have to recognize the expense. Third one, paragraph 4.51. Here, forgot about the paragraph, right? You are in closed book exam, forgot about the paragraph. Take this, keep these in your mind. If economic benefit decreases, we have to recognize the expense. If matching concept, we have to recognize the expense based on the matching concept. Then 4.51, that is also conceptual framework 4. Some expense are allocating for many period, more than one period. Example is depreciation. I have explained that the building depreciation charge for the period of 20 years. So reason of allocating expenses to more period. Reason එක conceptual framework එකේ මේ paragraph එකෙන් කියලා දෙනවා. හරිද? Then ඒකේ example උත් කියලා දෙනවා. You can see how easy that Chartered Institute making us. Even the chartered accountant using the books at the working place. You don't need to remember everything. You can just take a book and see whether why these expenses are recognized for more than one period, right? Then 4.52 paragraph, that is also conceptual framework 4. That is explaining reason of allocating expenses to one period. Why we are allocating expenses to one period? Some expenses we are charging to one period. Good example is rent, water bill, electricity, salary. Right. The example also given in that same paragraph. I will read that. Then 4.53. That is also conceptual framework for how that liability become expense. How that liability become expense. How the liability becomes expense, that is explained in 4.53. So with this, our explanation of the recognizing the expense in the financial statement is done, right? Next, expenses definition. When I was explaining the conceptual framework, I have explained this definition of the expenses, income, assets, liability, and the equity. Definition of the I know you are expecting to tell now also, right? Okay, I will tell. Definition for the asset is asset should be controlled by the entity and its future economic benefits should be flow to the entity. Only two features. The liability should be a present obligation of past events. First one. Second one is it will be or it should be reduce the future economic benefit of the company. So it's a liability. Expense means if future economic benefit decreases, it's a no, not future economic benefit. If economic benefit decreases, it's a expense. There are two types of expense. One is expense, second one is loss. Second one is fourth one is income. Income means if economic benefit increases, that is income. Right? There are two types of income. First one is revenue. Second one is gains, right? Disposal gains, non-current asset disposal gains, if fixed deposit disposal gains, those are gains. Revenue means it's a directly come from the sales, right? Then final one is equity. Equity means it's saying net asset is the equity, residual amount of the asset after deducting the liability. All the liability from the assets is equity, right? That is the definition for each financial statement element. Now definition of the expense is explained in paragraph 4.25b. Right? Definition of the expense. Definition of expense. This will be help you in corporate level also, right? I believe all of you will continue for the next level. No one should stop from business level, right? We want to make many chartered accountant for Sri Lanka. Then paragraph 4.33 explain expenses. What is expense? Then paragraph 4.34. These all are conceptual framework 4, right? Conceptual framework 4. Conceptual framework 4. Conceptual framework 4. Is explain losses. Now, once you understand recognition of the expense and definition of the expense, we have to understand why the income and expense are very difficult in identified in the financial statement. Reason for income and expenses presented in different way in financial statement. It is explained in paragraph 4.27, that is in conceptual framework 4, right? Let's look at one by one what this
Thank you for watching the video. Stay tuned with castudies.lk for more lectures online.